I'm going to start up the YouTube channel. Let's make sure that we can have a video just fine and dandy. I love it. Good morning, Erla, Steve, Adriana, Hamid, and Jen. Gamark. Is Gamark a new word? Jen's been drinking. It is 5 o'clock somewhere, right? Good morning, Dee. Great to see you. I'm showing you guys the wrong page. That's okay. Let's do this one. Everybody hear me okay? We solid? Got some good sound working, hopefully. Hopefully. Awesome. So let's check news, right? Today, yes. Yay. No kidding, Jen. Let's check our news. Let's see what's going on in the wonderful world of things. Today is Wednesday. Excuse me, July 10th. And at 10 a.m., hey, good morning, Jeffrey. At 10 a.m., Fed Chair Powell testifies. Guys, we had the exact same news yesterday. And it was a dud, by all means. It was a dud. But that doesn't mean that it won't be impactful today. It's still a high impact. It's on our radar. Write a note, 10 a.m. The market has the potential to move a little crazy, has the potential to spike, has the potential to do all the things that we don't want it to do. So 10 a.m. news. And then at 1:01, if you are hanging around, that bond auction can make a difference too. Guys, we're going to do exactly what we did yesterday. And this is actually kind of a preview for what we're going to do tomorrow. Simplicity. Can't say that enough. Simplicity. Keep it easy. Let's get great at one thing. Let's get great at one thing, and then we'll move on to the next. So that first thing, guys, your one thing. In the very beginning, I'm going to go to the glossary of common terms here, straight from the trading guide. We're going to talk about a high probability trade. Close your eyes and listen to the words that I describe a high probability trade. It's defined as when each indicator on every chart agrees with the rules for the trade. Everything is in unison, guys. It's this huge symphony of awesome. Your triggers are the strongest. No termination conditions exist. And there are no trouble spots between your entry and your target. This is the best of the best. This is the highest probability, the biggest chance of success when you are in a high probability situation. We are going to focus. Did you lose sound? Son of a gun. All right. Once again, YouTube users, I apologize. Gonna pull the Discord class back up. All right, guys, can you hear me? That was a full reboot. All right. Sorry about that. I don't know why it happens. I have absolutely no idea. Daryl, you could still hear me? So that's weird. I don't know if it's me or if it's you or maybe it's us, but we'll always work through it. It's what we do. Guys, we're going to talk about a high probability trend trade. Awesome. A high probability trend trade, guys. This is the trade that is the beginning for you. This is the building a foundation. And this is the trade that teaches you to read your indicators. And while you're learning to read your indicators, this is a trade that typically wins 70 to 80% of the time. That creates confidence, guys. Confidence comes from the memory of success. So we're going to focus on a high probability trend trade. And really the main reason that this is my focus every day is because it turns you into a chart reader. I think Andy said it in his good morning chart readers, right? Not good morning day traders, good morning chart readers. Because when you can read your charts, guys, you're going to realize that 90% of your day is spent sitting on your hands, doing nothing, being patient. And if you master that skill, if you master the skill of doing absolutely nothing when your rules aren't met, then you've beat the system. I firmly believe that. But once you're a chart reader, you're going to understand some pretty cool concepts. You're going to understand where the market is likely to continue. And initially, that becomes your entry for the high probability trend trade. As you grow with the software a little bit, you'll find all sorts of opportunities where that market is likely to continue. You're going to understand where the market is likely to go using momentum, using these key areas. You'll find yourself taking pretty intelligent targets at these key areas, and then you'll understand where the market is likely to stop. And this is probably the one concept that we focus a lot on, because this is the most broken rule for new users, having room to your targets. When you have an area that may stop the market, we call that a termination condition. And termination conditions are just nothing more than key areas on your large chart that may reverse the market. But there's a simple recipe to understand when they could actually stop the market, when they could reverse the market, when they can create these big untradeable bounces and fights between buyers and sellers. And having that knowledge, being able to recognize these likely to stop areas, pays huge dividends for the new user, because it means that you've always got a little room to make money if you learn to avoid them. So we're going to focus on this high probability trend trade, and I do it because it's only 3 rules. The high probability trend trade is 3 rules. That's it. Simplicity. I'm going to say that 1,000 times today. Keep it simple. Get great at one thing. There is strong triggers with your first rule. That's going to create the advantage of momentum. There's no termination conditions, none of those likely to stop areas. That's going to give you a clear path. And then once you understand momentum and clear path, ladies and gentlemen, you're going to pick your entry area. Initially, your entry area is the entry for the highest probability trend trade. The entry area is going to change, as you grow, as you begin to see more. You're probably going to find other ways to make money in the market. Absolutely you will. But I want you to focus on momentum and a clear path. If you master these 2, it's going to open all the doors that you need open to be successful. These 3 rules happen on 2 charts. That's it. We're not looking at 7 different time frames and a million different indicators, and we're not waiting for news releases and wondering if Mercury is in retrograde, guys. What we're doing is we're taking a large chart first. This is our broad stroke of a brush. It takes 1 bar, the most current bar on the large chart, and it's going to define, excuse me, allergies are real. It's going to define the direction of the market. It's going to define the momentum in the market, that first rule being met. And it's going to let you know whether or not areas are problematic, whether or not you have a clear path. Guys, your first 2 rules, 66.66666% of your advantages come from the large chart. Let the large chart lead the way. Once these rules are met, once you have momentum, once that path is clear, we're going to move to a smaller, faster chart. And this is a refinement chart. And this chart really is taking that 1 bar and almost like taking an x-ray of it. You're going to see 20 to 30 bars on a smaller chart, and all it is the movement inside of that 1 bar on the large chart. And by using that for entry, rule number 3, you will pinpoint the best of the best spot to get into the market. And it's going to give you the lowest possible risk, and it's going to give you the highest possible profit potential. And it's these 3 simple rules on 2 charts, guys. And all we're doing is we're taking advantage of understanding who's in control and very humbly admitting that we're not in control. We are the smallest fish ever in the biggest pond. Billions of dollars are traded daily in the futures markets. We're going to figure out a consistent way to gather $250 a contract, $500 a day, putting you into a six-figure scenario with one trade and an awful lot of patience, guys. Your large chart is the large crowd, the people with money, the institutional traders, as they call them. The men and women that have so much financial backing that if they want the market to go up, the market will go up. And if they want the market to go down, the market will go down. These guys are going to define the trend. These guys are going to establish the momentum. These guys and gals, I don't want to say just guys, they're going to react to those key areas on the large chart that can become termination conditions. The best plan for success is never fight the large crowd. Never fight them. Just go with them. If they say, hey, we're going to the mall, guess what? You're going to the mall. Because if you try to stop off at Walgreens, you get left behind. Over here is the small crowd. These are the people that still have pretty deep pockets. And they're kind of the rebels, and they love to fight the large crowd. When the large crowd says up, these guys want to go down. And we are going to embrace the small crowd. We're not going to side with them. We're going to pinpoint exactly where the small crowd typically fails 70 to 80% of the time. And this is your small chart giving you the best of the best entry for that highest probability trend trade. So again, it's only 3 rules and it's only 2 charts. And guys, there's an easy way to get to where you want to be. There's 1,000 difficult ways to do it. But there's a very easy way to get to where you want to be. And it all revolves around posting your trades in class. Post your trades, post your chart reads, post your questions. But the more you participate, the people that post the most typically make the most. So don't be shy. There's no such thing as monopolizing my time. There's no such thing as asking questions that you shouldn't be asking. If you don't know the answer that you need, I need you to raise your hand. I need you to type it on a chart, type it in the room, and let me give you those answers, guys. If you don't, I may not have a job tomorrow. So work with me here. My babies need food. And then use the spreadsheet that Nexgen provides. I give you my version of it every day, guys. I fill this out almost every day. And all this is, it's just an Excel spreadsheet that's been modified to turn into a trade journal. And the first tab says copy of my tracking. Every time I take a trade, it goes into this page. Every time, win, lose, or draw, it doesn't matter. It goes in here. I take a picture. I talk about how I felt. I talk about my advantages. I talk about the results. And most importantly, guys, because I'm posting every trade that I take in class, I'm using this notes section for the feedback. And what happens is you'll come back and you'll study this spreadsheet every morning. Every morning you're going to look at what you did yesterday and you're going to be able to say to yourself, this is a look that's bringing me success. This is the pattern that makes it easy. This is the pattern that makes it feel forced. This is what I need to focus on today, not only remembering and catching this look, but also avoiding this look that's creating problems. And if you do this every morning, if you go through this every morning, what happens is it's going to prepare you for the day because you're focused on advantages. And it will accelerate the learning because you're going back and you're creating recognition through repetition. So post them in the room for sure. Make sure you annotate them. Tell me what you see on every chart. Tell me why you did what you did. Tell me where you entered and why. Tell me where you exited and why. I love you guys that, hey, Mark, look at my entry. Look at my entry. Guys, show me your trades to completion. I don't need to see your entry. I need to see your entry and your exit because there's a lesson on both sides of the coin. So rather than just showing me an entry, I don't know what happened next. Rules aren't met. I'm going to learn to sit on my hands and I'm going to learn to do nothing because that's what the people that win more than they lose do. Simulate, practice. Don't wait until you think you're good at this because you're going to keep learning for the next, I don't know, 50 years, right? It never ends. So start practicing, start simulating. Take trades that you think fit the rules, even if you're not sure what the rules are. But make sure that when you do it, post them in the room, even if you lose. Because I'll go back to momentum, a clear path, and an entry area on everything that's posted in this room. And what that does for you is it begins to create that recognition. You start to hear things over. You begin to see these things over and over. The goal is that you don't practice the wrong trades, because getting lucky feels good in the moment, but it really is. It's a recipe for long-term failure. You have to practice like you want to play. You have to pretend that your Monopoly money is real money and be just as intent. We are going to simplify. Have I said that yet? I'm going to talk about this high probability trend trade. We're going to focus on the rules. We're going to focus on identifying each rule individually, putting it together for a trade. You have to know what looks you'll commit to. And you've got to learn these looks so they're easy. And that takes me back to the spreadsheet, guys. Learning the looks so they're easy. There's only 3 rules for the high probability trend trade. You have to have strong triggers. Here's almost 40 pictures of strong triggers. You have to have a clear path. That's about 15 pictures of a clear path. And then you have to have your entry, guys. It's 3 rules. You're going to break them down individually. You're going to learn them one at a time, so eventually you can put them together for a trade. I'm going to give you a sheet that's going to have you filling out this part of the spreadsheet, creating that recognition. And then as you begin to see high probability trend trades, you're going to fill up the green section on the favorite looks. This is rules met. This is what it looks like to have your rules met. So when people say, hey, I don't know, Jeffrey Dean, what's it look like when your rules are met? You go, hey, hold on one second. I've got 50 pictures of it right here. I will never miss this entry because I've studied it. I've committed it to memory. I know what it looks like. And the only way I ever miss this entry is if I had to go to the bathroom or had to fix a sandwich. Then you're going to work on management. You're going to begin to see patterns that repeat themselves. And guys, there's a whole section on termination conditions, going back, taking pictures of termination conditions, because this is the most broken rule. Go to the Dewey Decimal System, right? That card catalog. And then guys, there's the client trades, and this is where I've put a little bit of work in for you guys. I add to this almost every day. In the upper left-hand corner, it is the entry sequence, using that small chart for the high probability trend trade. There's about 350 pictures of you guys being just outstanding, taking those advantages and turning them into the trades. Some of them are high probability trend trades. Some of them are medium probability trades. Some of them have some issues in there, but they all revolve around advantages and great entries, because great entries create manageable trades. There is a section dedicated to the NASDAQ. Guys, the NASDAQ is... You're all probably at least my age. You remember the Tasmanian devil from Looney Tunes that just went in circles and couldn't form a normal sentence? A lot of drooling and spitting. Guys, that's the NASDAQ. If you're not comfortable 100% with what you're looking for in the market, if you're not 100% in tune with your rules, if you can't identify your rules in a matter of seconds, the NASDAQ more often than not will chew you up and spit you out. So we're going to focus on crude oil. We're going to focus on the S&P, and we're going to make sure that we are doing... And then you have the tattoo NASDAQ in your arm. There you go. I can make that happen for you. We're going to learn on slower charts first, guys. I'm going to spend time looking at the S&P. I'm going to spend time looking at crude oil, and learn the rules in a very mellow environment. And then once you know your rules, once you're comfortable with your rules, guys, NASDAQ is going to take those rules and then it's going to alter them a little bit, because it's such a fast market. And it is such an intense ride. And it looks like it's moving lightning fast. You're related to Tess on your wife's side. So keep it easy first, guys. Focus on the easy stuff first. And then you'll be able to get to the NASDAQ. Everybody gets there eventually. It just takes a little time. There's a whole section. There's a very mechanical management plan that I'm going to give you. But there's also ideas on when you can hold for more, when you need to exit, when you need to look for different opportunities. There's my section on patterns that repeat themselves. And then I filled out a lot of termination conditions as well. Guys, what I'm trying to do is give you something that you can go study every day, that you can click on these links and begin to recognize these patterns, to go back and study them when the market isn't moving. Because what that's going to do for you is all these pictures, right? Perfect trend trade short. If I click on that link, I'm going to be able to take today's lessons. I'm going to be able to look at this chart and say, wow, that's that momentum he talked about. There's that clear path I was hearing so much about. And look at that. He took a pullback right to resistance inside of favorable large triggers. Man, this is everything that he talked about in class. You know what? I'm developing trust in this methodology. I'm starting to believe that these rules work. Let me go look at another 200 and see if there's any similarities, guys. Commit them to memory so that they become easy. And then you got to learn them. You got to learn them individually. So without further ado, let's talk about strong triggers on the large chart. Let's talk about that big, slow-moving chart and the advantage of momentum, guys. So the large chart leads the way. If the background on the large chart is green, the market's going up. You should only be looking for your rules to be met for high probability trend trades long. Notice that I didn't say you should be looking for trend trades long. You should be looking for your rules to be met for high probability trend trades long. If the background is red, you should be looking for rules to be met for high probability trend trade short, because we are in a downtrend. And guys, if you're brand new to futures, one of the great things about these is that we don't care if the market is going up or if the market's going down. We're going to find opportunities both direction. And it begins with strong triggers. On your large chart, there are two trigger lines. There is a small trigger, which is a solid line, and there is a large trigger. Good morning, Zorro. Which is these dashed lines. Fast moving average, slow moving average. That's it. I don't know what voodoo creates them, but what I do know is that when my small triggers are up and above the large triggers, when the large triggers are wide and angled in the direction of the trend, guys, this little bit of space in between the small and the large kind of looks like scissors opening or a shark breaching, right? That space between the large and the small lets me know that the odds are favorable for the market to continue up. You're going to hear this all day long in my classroom. Odds favorable momentum. You're going to see it annotated on charts, OFM. Hey, Mark, I had that OFM. Mark, that OFM was there. Check out this OFM. I took this trade because of that odds favorable momentum. Guys, when you have strong triggers, that market is likely to continue in the direction of the trend. When you have strong triggers, it can break those key areas that the people in charge are reacting to. And when you have strong triggers, it can cover some of the mistakes that new users make. Guys, strong triggers, momentum, there are entire trading plans based on this. When you have odds favorable momentum, this is the best of the best time to buy Fibonacci support on a smaller, faster chart. On your large chart, it looks like one bar with a tail. But that tail is the retracement. It's that pullback on the smaller, faster chart. It's that small crowd fight. You will be able to pinpoint exactly where that tail is most likely to form. When the background is red, small triggers below the large triggers are wide. Space between the two lets me know that the odds are favorable for the market to continue down. With this odds favorable momentum, guys, this is rule number one. You will be able to pinpoint where these tails are most likely to form by using that smaller, faster chart. It's a pretty simple look. It doesn't take most people very long to figure it out. And if we come through and take a look, guys, odds favorable momentum. I know Pete made an awful lot of money on that push. Odds favorable momentum. When those small triggers start to return, we're weakening, guys. There's that momentum, maybe a tail. Is everybody good with that? It really isn't a very difficult look, but you've got to commit it to memory. You've got to insist on that separation. Because when the small triggers return to the large triggers, when those scissors close, if you will, work their way inside, this is a weakening of the large triggers. This is a visual that the trend is slowing. And when you have weakened triggers, anything can happen up or down. I want you to take your last $100 in this world and tell me, are you going to bet it on odds favorable, or are you going to hope that anything happen goes your way? Because trading is very much the same way, guys. You can visually see when the advantage is present, and you've got to visually see when that advantage is gone. When the scissors close, when the triggers return, anything can happen. You're going to see that annotated on charts, guys. ACH, anything can happen. Keep it simple, but make sure every time you're looking for a trade, you're asking yourself out loud, scaring the dog, do I have the momentum I need to believe this market is likely to push in the direction of the trend? And 90% of your day is spent waiting, right? So you've got odds favorable momentum here on the left, and then you can visually see the trend slowing into those anything can happen triggers, and there's a reversal, even without the benefit of Fibonacci on this chart. Weak triggers, and there's a reversal. Anything can happen, and sure enough, that anything was a reversal. It creates odds favorable momentum. Everyone in this classroom will be able to pinpoint where that tail is most likely to form, ride that wave of momentum up to Profit Town. Eventually, we lose momentum, it reverses again. Creates odds favorable the other way. All we're doing is we're letting the large crowd fight, guys, and once they say go, we go. And then we come down here, and this is a transition phase, guys. One of the things that's a must, the only way that I can have strong triggers is if my small triggers, my large triggers, and my background are all the same color. It should be going up, both triggers should be going up, everything has to be green, and that same token, everything has to be red. So if you look at your chart and you notice that the smalls are green but the large are red, or you notice that the background is green and the triggers are red, you don't have odds favorable momentum. Without odds favorable momentum, don't try to trade here. You don't have the advantage of momentum. And what this is, guys, this is a fight between buyers and sellers. This is where the market transitions, where it consolidates, where rule number one keeps you out of that consolidation. But this is where most users are tempted to predict what the market will do rather than wait for rule number one. The background is green, I've got to take a long, and then suddenly you lose that trade. Well, my triggers were red and I feel like it's a short, and it goes up and you're like, man, I can't catch a break. Rule number one keeps you from having to catch a break and simply grab hold of that advantage. So is everybody good with rule number one? Odds favorable momentum pushes the market, can break key areas, can cover mistakes. Odds favorable momentum is the one as a brand newser, that's a new user, shouldn't do without. Can you guys hear me? Does anyone have a Y on their keyboard if they understand? Odds favorable momentum? There we go. Cool. It's important. You got to learn those trigger lines, guys. Everything you do revolves around trigger lines every day. Once you have momentum, once rule number one is met, you have to have a clear path. No termination conditions. None of those likely to stop areas, guys. That means that you're going to have room to your profit targets. That means you have a clear path. It's like going down the highway at 100 miles an hour with momentum, and there is nothing in your way. And the things that could be in your way are lines on a large chart. And I want you to keep it that basic. Lines on a large chart. These can stop the market. Lines on a large chart can create bounces that are untradeable. Lines on the large chart can reverse the market. And if you use the word lines, what happens is you don't try to rank them or make one line more important than another, because the reality is all of these lines can cause trouble. We name them divergence highs, divergence lows, red resistance, blue support, yellow 1-to-1s, but they're just lines. And we're going to use the trigger lines to let us know if these lines are likely to stop the market, if they have the potential to break, or if they've already broken and that path is clear, guys. And we're going to do that with the trigger lines in a simple comparison. So if the market is trending up, the background is green, the triggers are green, and price reaches Fibonacci resistance. Price reaches the area. This sets off the decision-making process. This is what makes the people in charge say, man, it's time to exit. And it might make the opposing force to say, hey, let's dump 1,000 contracts in and see if we can't push it down. And this happens right at these key areas. And we'll scroll back in the live market and you'll see just how effective they are. But if price reaches resistance and the triggers remain below, this is an area that may stop the market, that may create an untradeable bounce. And the reality is that you don't know and you never will know. But this simple recipe says no more long trades into the area. If the sellers are in control, if they come all the way down to Fibonacci support, all you have to do is ask yourself, where are my triggers? And if your triggers remain above support, guess what? This is an area that may stop the market. It may terminate the trend. It may create an untradeable bounce. You don't know. So it's not a clear path. No trades into the area. Guys, this is the most basic rule. This is the most broken rule. We're waiting for a clear path. We want absolutely nothing between us and our target. And if you're at trouble, you have to pause. You have to wait. If it breaks, it's considered broken when the small triggers and the large triggers get to the other side of support. Support's now behaving as resistance. You have a clear path until you reach the next area. If everything is going up, smalls and large get above resistance, it's now behaving as support. You have a clear path until you reach that next area. So 2 options for the brand new user. Price reaches the area, triggers remain below resistance, above support, no trades into the area. Smalls and large break the area. Let's look for our rules met to take that high probability trend trade. This is your high probability trend trade scenarios. But your ability to read charts is going to open doors. And I'm going to introduce you to what we call a 50-50 look. And a 50-50 look relies 100% on odds favorable momentum. And it means that 50% of your triggers, the small, have absolutely smashed through the area. But 50% of your triggers, the large, are still on the wrong side. With this level of momentum, with that huge separation, that smashing through, this fib has the potential to break. But it's only the potential, guys. It is not a broken area until the smalls and large get below. With this look, I'm going to give you a plan so you'll be able to capitalize not only on areas with the potential to break, but you're also going to have a solid plan to capitalize when the areas are broken. 2 trades is what we're looking at here. But you've got to understand momentum to be able to grab hold of this 50-50 trade. You have to understand that the path isn't clear, that it's not a high probability trend trade. So we're going to keep it pretty easy in the beginning, guys. And I'm going to give you one more definition, one more look that revolves around termination conditions. When price reaches an area, when the triggers remain below, absolutely no triggers get above resistance, absolutely no triggers get below support. And then this termination condition, about 4 or 5 bars later, reverses the market. The large triggers go from green to red or red to green. This is what creates a strong top or bottom. Absolutely no triggers through termination that reverses the market, guys. And what this means is that the buyers were in control. Everything was 100% buys. And then when it hit this line, this key area, either the buyers completely jumped ship and took profits, decisions were made, or there were so many sellers that they overwhelmed the buyers. And you have such a strong, decisive change of direction in a key area that whatever happens after that is more likely to win, is the easiest way to say it. Your highest probability trend trades come after a strong top or bottom. The likelihood of areas breaking, that potential goes up after a strong top or bottom. So you're going to hear this a lot and you're going to see it annotated. And let's go to the large chart and let's see if termination conditions are a thing. Weak triggers at a fib, directly into a fib, no triggers. Smalls on the wrong side at a fib, and sure enough, there's your reversal. Directly to resistance to the tick. Ladies and gentlemen, do you see it? Directly to resistance and a divergence high, triggers are below. Absolutely no long trades. Weak triggers at support, set off the up move. Potential to break, but didn't. Right into a divergence low, triggers don't break, that bounces it up. It's almost eerie how accurate your software is. You always hear that old adage, right? Buy low, sell high. Ladies and gentlemen, with a simple set of rules, you now know where low and high are. and you know how to capitalize going the other direction when it's established. Is everybody good on large chart terminations? Sometimes you're going to sit on your hands and do nothing. 90%. On the small chart, there's one termination condition. One time when I look at a small chart and I say to myself, rule number 2 isn't met. I don't have a clear path. And that is the idea of 3 divergences, 3 losses of momentum in the same price range. You will know that there's a loss of momentum because the cyan, this blue line, will print from a low. This magenta line will print from a high. And it happens right off of a pivot, guys. It takes about 3 bars for the calculations to be done. So the market will go down. The market will start up. And if there was a loss of momentum, you're going to see this blue line. If the market goes up and then starts down, if there was a loss of momentum, you'll see this magenta line. 3 divergences, 3 losses of momentum in the same price range may terminate the trend. And this is true on any time frame. Big chart, little chart, range chart, minute chart, day chart, doesn't matter. Doesn't matter if it's Tesla, crypto, crude oil. 3 divergences in the same price range may terminate the trend. You're going to see it first on your small chart because that's your fastest chart. This is only 1 bar on a large chart, right? Maybe 2 bars worth of information on the large chart, but you're going to see 3 divergences print on that small chart, and you're going to say no more short trades, no more long trades. And it becomes even more powerful when those small triggers are inside of the large. That anything can happen look. Now you're giving away momentum through divergence, and you're also giving it away in your trigger lines. And it becomes more powerful still when that third pivot is higher than the previous from a low or lower than the previous from a high. It's a head and shoulders pattern. It means nothing to me. I don't know. There's people that trade these. But what it means is that price couldn't even push down to the previous one, right? And we're losing momentum. More likely to go up. So 3 divergences on the small chart is the only termination condition on a small chart. Everything else is lines on the big chart. And guys, rule number 2, 90% of your day is spent reading charts. This was over around the holidays. I want you to see how many termination conditions took place. And this is like over a 4-hour period. How many times the trigger lines didn't line up? How many times we traded directly into areas and it reversed the market? Rule number 2 is going to help keep you out of consolidation. Rule number 2 is going to help keep you out of choppy markets. Rule number 2 is going to keep you from hoping the market does something that your indicators aren't telling you it's going to do. The quicker you accept that 90% of your day is doing nothing, the more accurate your trading will become. The second you insist that the only way I'll ever take a trade is if my rules are met, the more profitable you will become. When you begin to focus on the process and not the money, that's when great things happen. So is everybody good? Momentum and terminations, we have to have rules 1 and 2 met. That large chart says down. The large chart says momentum. The large chart says we have the potential to break. It's time to look for an entry. The small chart, from the bottom of the bar when we start to look for an entry, is going to be the beginning of that fight from the small crowd. The top of the bar, that tail, in a perfect world is going to be resistance inside of favorable large triggers. You guys are going to be able to pinpoint this entry. So much so that it's going to reduce risk, that it's going to maximize profit potential. You guys will be able to pinpoint that entry with such accuracy that you're going to use a limit order. You're going to wait for the market to come to you. You will actually sell the market on its way up. You will buy the market on its way down. But here's the key. There's a recipe for pinpointing. You're going to use that limit order and you're going to buy or sell a pullback. What's a pullback? A pullback is nothing more than a tiny retracement in price that's counter to the underlying trend. When everything says up, we are going to buy this pullback. But we're not just going to arbitrarily jump in. We're going to buy that pullback. We're going to use a limit order at areas, lines on the small chart, fibs, mid bands, and yellow 1-to-1s. And you are going to insist that those lines are buried inside of triggers, and you're going to insist that they're buried inside of what we call favorable large triggers. Because large triggers are moving averages, and on these charts, price typically returns to the moving average. It happens all day, every day. Price breaks away, pulls back to the moving average. It goes back up, back to the moving average. Price breaks away, back to the moving average. So what we've done on the small chart is we've put that correction spot, those large triggers from the large and the small, they're both on the small chart. They're both on the entry chart. One is smooth, that's the one that's native to the small chart. One is kind of stepped. We're going to call that the synthetic. Synthetic is a fancy way of saying from a different time frame. So large and synthetic, guys, when they are one on top of the other, two snakes riding piggyback, one hand on top of the other, when they are overlapping, what you have is one correction point. You've turned two spots where price may return and turned it into one. And when you give it something to bounce off of inside of that super tight favorable large triggers, you will reduce risk, you will maximize profit potential. So brand new users, insist on favorable. When you grow with the software, you may find other opportunities. But here's how we're going to pinpoint. Remember, when the large chart says up, when the large chart says odds favorable momentum, when the large chart has nothing in the way, I can't stress enough, when the large chart rules are met, we're going to wait for the small crowd to fight, and that begins with a reversal bar. This red bar. Guys, these small triggers are a super fast momentum indicator on a small chart. As long as price is on this side of them, it's probably going to go up. But once it comes to the other side, that's a loss of momentum. We don't enter on this loss of momentum. We don't enter on the reversal bar. It just gets us ready. Hope in the small crowd. It says the small crowd's doing their thing. So once I get a reversal bar, not my entry, I'm going to find my favorable large triggers. I'm going to find those large and synthetic. I'm going to insist that they are wide, that they're angled in the direction of the trend, and more importantly, that they are overlapping. The triggers are not my entry. I'm not entering when price hits the triggers. I'm looking inside and I'm going to create my window of opportunity. And I'm looking for the areas, fibs, mid-bands, yellow 1-to-1s. Below the highest line of the triggers, I don't care if it's large or synthetic, doesn't matter. And above the lowest line of the triggers, again, doesn't matter if it's large or synthetic. Any area in between this range is part of my window of opportunity, the point where the market is most likely to continue. But because the large chart is screaming to the upside with absolutely nothing in the way, I'm going to place a limit order 2 ticks above the highest point of support inside of favorable large triggers. And this becomes my entry for the highest probability trend trade. We are not trading the tails, we're trading the pullbacks to areas inside of favorable large triggers, going the other direction. The reversal bar signals the beginning of the fight, the beginning of the pullback. The reversal bar is not my entry. The reversal bar is actually a loss of momentum. I don't want to jump in on a loss of momentum. I want that loss of momentum to carry me up to areas inside of favorable large triggers. And if there's only one area, guess what? Your window of opportunity is one line wide. Your entry goes a tick or two below that lowest point of resistance, and this becomes your entry for the highest probability trend trade. Not the impact on the triggers. We're letting areas inside of favorable large triggers create the bounce. And I'm going to show you something. If trigger lines are the correction point, if this is where I expect price to come back to, any area on the wrong side of those triggers is not a part of my window. It's not in the equation. Something's gone wrong if I go beyond those trigger lines. All of these areas up here outside of the trigger lines beyond the correction point are not a part of the equation, guys. I'm going to have a stop up here because I'm going to say, man, if it pushes past a bounce point inside of the correction point, I no longer want to be in that trade. And that's what's pretty awesome about focusing on high probability trend trades first, focusing on these entries first, because once you understand where the market is most likely to continue, you understand where it shouldn't go if that trade's going to work. And guys, remember, anything that wins 70 to 80% of the time is absolutely, without question, required to lose 20 to 30% of the time. It's just basic math, right? So once you pinpoint where the market is most likely to continue, your initial stop is going to go 4 or 5 ticks beyond those trigger lines, beyond that correction point, and you're going to say to yourself, if the small crowd has it in them to get beyond that correction point, I don't want to be in the trade anymore. I've lost my advantages. The same is true this way. If they can get beyond that correction point, beyond that bounce point, beyond that window of opportunity, I don't want to be in that trade. And guys, every 10 trades you take, you're likely to lose 2 or 3. Every 100 trades you take, you're likely to lose 20 to 30 if the high probability trend trade is the only trade that you're taking. So it's imperative that your entries are great. Because if you enter early, your stop still belongs here. If you enter late, your stop is still up here, guys. With all those advantages in play, you're more likely to get a reversal bar in the direction of the trend. Well, this one signals that the fight begins. This one says, hey, now we're doing what we do 70-80% of the time. And you're going to be able to reduce your risk below the reversal bar, above the reversal bar. And guys, it's not unheard of to see Nexgen users taking amazing entries, getting in at the areas inside of favorable large triggers, putting their stop a couple ticks below, and even if the trade fails, losing $40 or $50, as opposed to hoping it just goes up when everything has gone wrong and losing 300 to 400. So you've got to be able to study this. You've got to go back and look at it. And here's how. When the rules are met on the large chart, circle a tail. That's it. Use your drawing tools. Circle a tail. If that tail lines up with support inside of favorable large triggers, resistance inside of favorable large triggers, well, you have a high probability trend trade. This is what it looks like. Commit it to memory. You can recognize trigger lines. You can recognize room to targets. You can recognize areas inside. And guys, the more of these that you see when the market isn't moving, the easier it is to catch it when it is. So go back and study it. This is from the spreadsheet. Odds favorable, clear path, pull back to support inside of favorable large triggers, money made. They even put a checklist on there to make sure that they were following rules. Odds favorable, haven't reached the area, pull back to resistance inside of favorable large triggers. Guys, these are actual trades. Look at that entry. This is what you're learning right now, but you've got to believe in momentum. You've got to trust the clear path. And guys, it's hard to sell when the market's on the way up. It's a little scary initially. So we're building trust. And the easiest way to build trust is to fill out that spreadsheet, guys. Get all these pictures. Study the pictures that are in there for you. And that's it. There's your high probability trend trade. 3 rules, right? Don't look for a trade initially. Don't look for a trade. Take a day and look for odds favorable momentum. Learn to recognize it. And I'm going to give you this right now. This is Chart Reading 101. And what this is how to study. How to get great at never missing odds favorable momentum or a clear path. Because you've got to learn these looks. They have to become second nature. They have to be instant when you look at that large chart. So this is designed to make you a chart reader, guys. Take 25 pictures each. Strong triggers, weak triggers, clear path, termination. Take 25 pictures of that 50-50 look so you know what it looks like, so you're never confused at what you're getting into. Take pictures of those pullbacks to areas inside of favorable large triggers. But don't just take pictures, drop them in there, and say, I did my homework. Show your work, guys. Write on your charts. Annotate your charts. Talk about the whys. Why is it strong triggers? Well, because the smalls are above the large, because there's space between the two. What does that mean to me? That means I have the advantage of momentum. Well, what good is momentum to me? Well, momentum is rule number 1 being met. And if you do that 25 times, guys, if 25 times you say strong triggers, smalls above large, all green, momentum rule 1, you're never going to miss this look. You're never going to accidentally say, man, I had strong triggers. I wonder what happened. You're going to say, wow, those triggers were weak. Anything can happen. Smalls inside of the large, and look what happened. Anything to the other direction. So this right here is designed to get you comfortable. I'm going to drop it in the room right now. Let me put that in there. I'm telling you, I'm going to give you everything that you need to be successful except repetitions. That's on you. I'm also going to give you checklists. I'm going to give you 2. I consolidated these a little bit for you. So the first page is just a checklist that you can print out, that you can put on your desktop. And what this does is it says, hey, these are your advantages. this is what you're looking for. This is what has to happen to get you into a trade, right? And you can choose to follow it or not. It's up to you, but I've never had anybody follow this to the letter, ever, and do worse than 70% winners. Remember, guys, this is a trading business, and your business is to win. 70% winners. Never had anyone do worse following this. And it talks about the strong top or bottom. There's an awesome video that my brother put together. I even linked it into this. Odds favorable. You have to know what it looks like. Terminations. You've got to be able to recognize them. And notice the language. Area inside of favorable large triggers. That's key to your success. And then if you scroll to the second page, there's a strong bottom because it reversed. There's odds favorable. There's anything can happen. There's a termination. There's the potential to break, and now it's broken. Every concept that you need to go take pictures of, you have a cheat sheet. There's a window short. There's a window long, guys. Once again, you are all my horses. I'm bringing you water. It's going to be up to you to drink. So I'm going to put this one in the room. Let me get it in there. And then I'm going to give you one more thing. I've already given you the spreadsheet, right? I've given you how to study. I've given you what it looks like. You know what? Let me give you the PowerPoint that I teach class with every day. Now you have access to every picture that I use to teach the class. So all we really need now is a plan. Traders should have a written plan. Traders should know exactly what they're getting into every time they take a trade. And that's what we just talked about. We talked about entries, guys. And this KISS plan, the Keep It Simple Sunshine plan, this is a stepping stone in your learning journey, guys. This is just the beginning. This is kindergarten. We're still napping and eating paste at this point. And it's designed to optimize your chances of success with the high probability trend trade as a new user. It's designed to create confidence in the new user. It's designed to make you a chart reader. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That means that once you can read your charts, you're going to see things. You're going to find opportunities. You're going to see more trades. You're going to become a chart reader. But guys, your chart reads have to always be to confirm your rules. And that's a dangerous game because we all get really good at being chart readers. And that's when opinions come in, guys. And we all know what opinions are like. So your simple plan for consistency. Don't fight the large chart, guys. Don't fight the large crowd. Define your entry. Make it your entry, right? It's not I'm coming in here and I'm going to take Paul W.'s trade, or I'm going to be like Clara, or Adriana's my hero, I'm going to do what Adriana does. You can't do what Adriana does. You can only do what you do. The only thing you'll ever be in control of is your actions. So define your entry. Make it clear. Know what it looks like. And then once you're in, you've got to do something with it, guys. That's the second piece of the puzzle. Learning to day trade is like eating an elephant. You've got to do it one bite at a time. You're going to create a management plan over time that suits your needs, guys, once you're a chart reader. But until then, let your management be as mechanical as your entries are, right? So your management plan begins with understanding where the market shouldn't go. And that's where your first stop goes. You're going to go outside of the window of opportunity, 4 to 5 ticks. You know what? If it comes up here, I don't want to be in that trade, and I'm cool with that. I'm going to dust off, and I'm going to get back into it. And I'm going to wait for the next great trade. But more often than not, because you're embracing advantages, you're going to get a reversal bar in the direction of your trend. This is your signal to reduce your risk. 2 ticks above the reversal bar. And guys, I'm telling you, it's going to get hit every now and then. It's a normal part of a positive equity curve. But with all of those advantages, you're going to sit on your hands and you're going to say they're either going to hit me or I'm going to hit my first target. And for you KISS users, for you junior chart readers, your first target is only $100 in the distance. $100. Doesn't feel like a lot. $100 doesn't feel like a big win. Guys, day trading is not about home runs. Day trading is about getting on base. It's about base hits. Because 4 base hits is a home run all day long. So you're going to take that $100. You're going to smile. Your palms are going to dry up. and you're going to move your stop to break even. And again, break even may not be the best stop, but you will craft a plan based on your ability to read your indicators. So for a brand new user, keep it mechanical. If I get the right entry, then my stop goes where the market shouldn't. If I get a reversal bar, then I reduce my risk. Awesome. Andy, congratulations. Don't you car title for your daughter. You make her do that. Teach her a lesson. And if it goes to my first target, then I go break even. How simple is that? There's no thought, no fear, no emotion. It's 100% mechanical. And guys, if I don't get stopped out, break even. All right, that's fair. I'll give you that, Andy. My car is in Austin with my youngest, and I've been waiting a year for him to put it in his name. So I had to go after him when I started getting toll bills for that car in my name. Guys, if it goes to the second target, it's only $200 away from entry. It's only $200 from that perfect high probability entry, guys, and that turns it into a $300 winner. One trade, $300. And guys, this is the basis for everything you do as a brand new user. For everything. Man, Morgan, they're not that much. This isn't California. He bought it for $1. He'll pay taxes on the dollar. It'll cost him, it should be. Don't get me started. Registering your car every year is utter bullshit. It's still your car. It's just a money grab. Don't get me started. Guys, this is your plan in the beginning. This is your KISS plan. This is your best chance of success. This is the emotionless management. I'm going to put this in the room. And the second page is that 50-50. The second page is that potential to break. So I'm giving you both of those, guys. I've given you the checklists. I'm giving you the KISS plan. You have my PowerPoint. $35. Yeah, it's not much to transfer a title at all, Paul. You have everything that you need now. Are there any questions about the high probability trend trade, about the 3 rules? This is our large chart. Potential to break and didn't. 2 termination conditions, right? Man. It looks like crude oil is winding up for crude oil inventories at 10:30. Yeah, it's because you live in California, Morgan. You should have came to Texas with the rest of the Californians. But you guys have better beaches than Texas, that's for sure. Guys, this is my first hour. This is my first hour every hour. Or every day. High probability trend trades. Teaching you how to fill out your spreadsheet. Taking pictures. Annotating charts. Understanding that participation is key. I do it every day because this really is. This is your path to success, guys. This is exactly what it takes to get to where you want to be. And I'm going to tell you from my own experience, from 4 years of teaching people to day trade, the further you stray, the more you look for, the harder it is to get comfortable. And I'm looking at least 5 names in this room that tried to catch every trade. And when they backed off and they made it simple, that's when they started finding success every day. And guys, feel free to chime in and support that if you want to. I won't call anybody out. Know your rules, commit to your rules, take your trades. Guys, I'm going to go run a lap around my house. So you can watch crude oil. Right now you have the potential to break. We'll see what happens. We all admit it, guys. We all admit it. We're all adrenaline junkies. This is not the adrenaline junkie job. I'll be back in 5 minutes. I'm going to go quick too so Ron doesn't make fun of me. When I come back, we'll start clicking on all the pictures that you guys have posted, guys. Post them up if you got them. All right, y'all, we're going to get back to work. I'm going to go through and I'm going to start clicking on every picture that's been posted today. We're going to look at your trades, answer any questions, guys. Just because it is Jen's chart or Steve's chart or Morgan's chart, it's open game, it's fair game. Ask a question. Remember, when you're posting, guys, let me know why. Let me know why you did what you did. Even if it's not a high probability trend trade, your annotations help me know where your chart read's at. And if your chart read needs a little help, it really sets it off. I try to turn your charts into lessons. Sometimes the lesson is for the class, so if I go off on a tangent because of your chart, don't freak out. I'm not singling you out. It's for the classroom because you probably did something or showed me something that is pretty universal in the learning experience. So I'm going to scroll up to the very top of the chat room and start going. Guys, feel free to interrupt. Feel free to ask questions. Let me know what you're thinking. And we'll see what we can do. Jonathan got us going this morning. And I've already done the feedback on this one, but I want to share it with you guys. So Jonathan's got this termination and everything rolls and the momentum is great. And there's two trades here. And I want to talk about the difference, guys. And both of them are jump-in trades for the most part. They're saying, I've got momentum, let me get in and just ride momentum. And there's nothing wrong with that. And it's not a bad trading plan. And it takes a little practice, and there's things that you have to think about. But he does it here, and Jonathan, we already talked about it. And you've got 3 ticks before you hit a fib with all the triggers above it, right? There's just really no room. If one thing goes wrong, if there's any reaction, you're out of that trade for a loss almost instantly. And then the second trade is letting price get below the trouble area and then looking for your opportunity with the momentum. And the fact that there's quick profits here, it's only 3 ticks. That's not a lot, right? It kind of solidifies the idea that you have to know why you're getting in and you have to know why you're getting out, right? Why did you get out break even or 1 tick? Why did you get out for only 3 ticks? And you said took the trade off because the triggers are coming together. I don't even know what that means. It's a momentum trade. That's all it is. It's momentum in, momentum out. Until you get a loss of momentum, you're in this trade. If it fails, well, then it might turn into a trend trade, but there's no areas inside of favorable large triggers. Does that make sense, Jonathan? Guys, you got to know why you're doing what you're doing. You've got to know why you got in, and you have to know what it's going to take to get you out. And once you can do that, you start eliminating these 1 tick break even, absolutely nothing changed but I jump ship anyway trades. When you arbitrarily move stops, guys, they're going to come get them every time. It's like there's cameras. Andy says, everything's up. It's not the best momentum. It's weak triggers, but it's a clear path, and it's a pretty clearly defined area. Andy gets in, makes money, gets out, because he knows it's not high probability. Great job, Andy. And then Jonathan, 50-50, it's not broken. We're at the tail end of momentum. Once again, you just jump in. And this is why I really like to see what happens, right? So what happened? Why is your stop floating in the middle of nowhere at 51, right? What are your exit conditions? I love that you waited to get to the other side of trouble. What's it going to take to get you out? Because this right here doesn't make any sense. To say that I'll give it 4 ticks, that's it. There's no room. The market doesn't dance around in single tick fluctuations, guys. The market moves sometimes 4, 5, 6, 7, 8, 10 ticks. And if you go so tight that there's no room for movement, guys, it's just going to stop you out and do what you thought it was going to do. So focus on those exit rules too. And then this is when I told you that there's plans that revolve around momentum. Pete says, I have the best momentum ever in a clear path coming from a termination condition. And I have the best momentum ever, and I'm just going to hop in. And until it takes it off, I'm going to hold it. Beautiful trade. $4,300, $4,500 trade. That's not a bad morning, Pete. Nicely done. We haven't seen a high probability trend trade yet, guys. Not yet. Rob says he wanted to go long at 81.52, but was waiting on the triggers. As you can see, the small triggers rolled up, so it had to go up. That's what I was waiting on. As I waited for the triggers to break, they didn't. So, all right, Rob, are you with me in here? That's all right, Pete. Rob, this is that gap theory again. When price reaches a mid-band and the large triggers are all the way down here, it's likely to close that gap. You had a lot of reasons. This is when the mid-band behaves as a termination condition. Absolutely no longs in this situation. Directly into a termination. Absolutely great job, great patience. Nice job. And Pete, I'll forgive you that $1,000 this time. Let's get those math skills up to snuff, buddy. I'm the worst mathematician ever. Ever. I will never get on you. All right. 50-50, waning triggers, bad bottom, divergence prints, and Andy says, you know what? Probably not my trade. Not my trade on a 50-50 from a bad bottom with divergence. Guys, this is brilliant. This is following rules, 100%. Nicely done. And then, Jonathan, this was where you jumped in at the same time where Andy says, I'm not taking a trade. And then, Rob, I was saying, do you remember the gap theory? I don't know if you heard me when I said this. When is the mid-band a termination condition? When the large triggers are a full bar away. That's the gap theory. That was your no long scenario right there. That was the don't go long, the mid-band's a termination because the large triggers are a full bar away. On the spreadsheet, there's like 25 examples of that. Mid-band's reached. Large triggers are a full bar away. That's your chart right there, right? You wanted to go long over here at 52, but nothing ever got through. Just not rules met. It's a great job not taking the trade. That's hard to do, especially when you've been sitting still for a while. When you haven't done anything, you're like, I just want to be in the market. And then Doug, terminations, waited on divergence to print. You bought in at 37. Take first profit at 47. Stop loss was set at 81.30. All right, so what kind of trade is this? And this was Doug. I want you to see something, Doug. And this would be one of those times where I go into a lesson that may or may not be for the person that did it. So let's check it out. Couple things that I notice. So the first thing, Doug, is your smalls is close, right? It's close, but you're calling it a 50-50 from 35. I want you to see this is 35 right here. And at the time of your entry, large triggers are down, small triggers haven't really pinched and rolled yet, synthetics are down, large triggers are still down, you're coming right off of resistance, everything is below resistance. These are the challenges that I see. I love one divergence. I would rather see a divergence and maybe a higher divergence, 2 or 3 divergences. At this point, with no clear path, with large triggers down, that's a tough trade, Doug. You did it nicely. But why 30? What made you think that this fib would hold and it wouldn't pull back to the triggers? Sometimes I have to say it, and I hate to say it. Sometimes I have to say that you might have gotten lucky, but I want to go into the other side of it, because one thing that I'll do is I'll look for the positives in everything. Drives my wife crazy sometimes. You saw the terminations and you said, man, when this happens at stacked areas, that's rad. And you waited for a divergence to print. You said, let the small crowd tell me that we're losing momentum. And this is my favorite part. And I don't know if you know this lesson, Doug. So there's your small triggers, right? You get in left of the small triggers. And this is what we call the momentum phase. When price is left of the small triggers, it's going up or down until it gets to the other side. So Doug, you're in the momentum phase, and you also happen to be in the momentum phase down here. Did you know that? Because that's a great look. And as long as you're on this side of those triggers, it's going up. Pretty cool, right? And then there's your first loss of momentum. That would have been a very appropriate exit. But you didn't even have to do it. You just said, you know what? Let me get out at this big red line. I love it. So, guys, I can go after your charts and I can say, holy termination conditions, trading without momentum, holy shit. And then I'll come back and I'll say, this is exactly why that one worked as well as it did. Termination conditions are powerful, and Doug knows this. Momentum phase is powerful, and Doug knows this. And Doug also knows that red lines can jack up the party. And what a great place to take profits. So I like it. I don't know that I would have taken that pullback directly into a fib, right? You got a big gap. Your triggers are split. Is it going to go to 45? Is it going to go to 49? Is it going to drop all the way to 35? Hell, I don't know. And you just made a lot of money. Pocket it. Wait for the next great trade. Nicely done, Doug. Good to see you in here making good decisions. All right, let's see who's next. We saw Andy, man. We got Doug. All right, Miss Clara. Strong triggers. Not a clear path, Clara. Let me scroll down to make sure that you're with me on this one. Aha. So let's go through it. Whoops. So let's just do a quick clear path. And this is pretty common. So I don't want you to be like, oh man, I can't believe I messed that up. And tell me if I'm right here. And I know because this is pretty common. You probably said, triggers got to the other side of this fib. My path is clear, right? And you're thinking, yes, let's go, let's go, let's go. Is that, but you got that next fib. Yep. So while you cleared this level, this one was still trying to break and it wasn't quite broken. Does that make sense? And that's one of the challenges when you get these double levels like that. You're like, oh man, I made it. And you're so focused on getting past this fib that you almost completely tune out that one. So we're still 50-50. And then we get divergence on a 50-50. And it's from a bad bottom. So if I go to the KISS plan, and I'm not sure what your rules are, Clara, but in the KISS plan, when we talk about the best of the best on a 50-50, from a strong top or bottom, from a termination with no triggers through that reverses the market, that sets you up huge. And sometimes if I have that, I might even ignore this if I have the best looking momentum ever. But it also says no divergence, and that's kind of two strikes again. The biggest killer of these trades is divergence. It's such a red flag, and especially when it's coming from a bad bottom. And look at this, that's a bad top, and the 50-50 failed. And that's a bad bottom, and the 50-50 failed. You got 12 minutes, Rob. You can do whatever you want, brother. Does that make sense, Clara? I love a strong top or bottom, but given the idea that you thought that it was a clear path, your entry makes sense. It really does. But I would have used that reversal bar. You could have had 3 ticks of risk, and in at 43, you only had to make it to 45 to make $100, Clara. So if you had seen it as a 50-50, it probably would have changed your mindset a little bit. You would have been willing to get paid on that trade, get to break even, rather than giving up the money below the synthetics. Does that make sense? So the reversal bar says reduce risk. It's not high probability. No, you're okay, cool. Your computer froze? And this is why I always say, know what you're getting into. And this was just a little clerical error, no big deal, right? But it still turns into a great lesson, because we go into the clear path lesson. We go into it's a different kind of management lesson, and it kind of reiterates the idea that even on the ones that don't work, there's still the potential to make money with a pretty aggressive plan. So Clara, nicely done. All right, Jen, strong top, termination that reverses the market, 50-50 trade. There's that divergence again, no trade. Jen says, I've been hurt before. Nicely done, Jen. Guys, these pictures where you follow your rules and don't take a trade and you annotate why are huge in the learning process. Don't be afraid to take those. And then Steve T, same thing, strong top, 50-50, odds favorable, you just jump in, right? You said, I'm just going to jump in, and it turned on you instantly. 50-50. So, man, Steve T, I see why you did what you did. I understand why you did what you did, for sure. One of the ways Nexgen teaches momentum trades, really the only way that Nexgen teaches momentum trades, and when I say Nexgen, I guess I have to say me, I want you to see this. So what you took, Steve, let me go back to it. The trade that you took is what I lovingly call the JTFI trade. And all of you guys seem to be taking it. What does that mean? That means you jumped the F in. That's all you did. Not mad at you for it. I understand why you did it. But here's the deal. And that's okay. There's people that make money on these. So do you remember the lesson? As long as price is left of these, it's going down, right? Look, it did it here. But once it goes right, that retracement can happen. Once it goes right, that retracement can happen. So Steve T, what you did is you got in relying 100% on momentum, but then when momentum failed, you refused to exit. So my suspicion is that you get excited about the momentum, but you don't have an exit plan. Because you have to make a decision, right? Am I going to exit maybe you do because you got out, it looks like, with divergence. But are your rules still met for a trend trade? So you've got to, I think on these jump in trades, guys, these should be low risk endeavors. That momentum either screams in the direction, because when it starts to dance and the momentum is gone, your brain says, just hold on, hold on, hold on. And that ultimately gave 3 divergences in the same location. So I understand why you did what you did. But this right here says momentum is over. I'm not sure what your exit plan is. It looks like divergence might be your reason, which is cool. But if this were wide open, then you just exited at the entry for the high probability trend trade. You got to think about a lot mid-trade. Don't know. Take care, Andy. Since he can't hear me, he'll see that later, or hear it on YouTube. Does that make sense, Steve? Understanding why you get in, understanding why you'd get out. Morgan says not a clear path, not looking for a runner. Odds favorable momentum. You already have 2 divergences. You take it anyway. 3rd divergence prints. And you pay commissions. So Morgan, I'm going to give my 2 cents on this one, guys. Hello. You had your strong top. So for me, in my own personal life, I'm willing to forego 1 divergence on a 50-50 if I have a strong top or bottom. That's my plan. I'm still reducing probabilities. But my personal plan says 1 divergence. If it's the strongest top and bottom, man, absolutely, I'll take that trade. And if you had caught this one, right, you had a little bit of time. 2 divergences on a 50-50, for me, guys, don't worry about what I do, but I'm going to share it because I've gotten absolutely annihilated more often than I didn't. 2 divergences on a 50-50 for me is a 100% deal breaker. At that point, I just say let it clear. Why? Because if 1 divergence can absolutely annihilate the typical 50-50, hold on. If 1 divergence, oh no, I just killed it. If 1 can ruin the party, 2 is like even worse, and 3 is right out, right? Holy hand grenade. So, we get excited, especially when the market's been consolidating. And I say we because I don't think anybody in this room is void of that. When the market consolidates a little bit, we start getting antsy. When the market consolidates a little bit, we start chomping at the bit, right? I need a trade. I haven't had a trade. I haven't made money in 38 minutes. I'm going to live under a bridge. This sucks. Ugh. And you say, you know what? I know it doesn't follow my rules. I know 2 divergences is going to lose more than it wins. I know it's not a clear path, but God, I haven't been in a trade in 45 minutes. And you made commissions, right? And you did take quick profits. I dig it. But you knew it was rotten. You only took 8 ticks. You didn't even let it get to 10 ticks. So it's a lot of work. It's a lot of work for a super low probability trade. And I won't tell you how to trade it, right? But I will say those, look at that. 3 divergences reverse the market. Kind of cool, right? 50-50, no divergence. Right back to the mid band, right on above the correction point. Did anybody catch this one? The easy, effortless, no divergence, everything says up. Holy shit, look at the potential. Because those are the ones that are going to pay your bills, guys. Jen did. Because of the bad bottom, you're not taking the 50-50? All right. Oh, waiting for crude oil inventories. That's true. We've got that in 3 minutes. That was the look, though, right? That was the one. Adriana, you took it? Of course you did. You simplified your plan. And guys, I'm going to tell you right now too, the trades that you avoid now, that you talk yourselves out of now, you're going to be surprised how those work their way into your plan later when you get a little comfortable, when you have those repetitions. And as much as I hate to admit it, ladies and gentlemen, we've gone through every picture that you guys have posted, which means that the burden of education falls on you now. What do you guys want to talk about? What are you working on? Kenan, Daryl, Izzy, Cheetah, Kenny, Andy, Zorro. What are you guys working on? What can I help with? You guys want to see something cool? I made this the other day. Does everybody have a daily goal? Breakfast, I like it, Paul. Does everybody have a daily goal? Do you have it written down on a piece of paper what you want to make every day? You should. That's part of a trading plan. I want you to see this, guys. A daily goal times 252 trading days. If your daily goal is $100 and you hit it, $100, that's not much, right? 25 grand at the end of the year. $200 is 50 grand. $300 is 75. $150 a contract. Let me ask right now, give me a why in the room. Do you think you could take the best of the best trades and make $300 a day? Anybody? Yes. Yes. Absolutely. So for everybody that said yes, are you hitting $300 a day? You don't have to answer it. If you're not, is it because you're chasing more trades, because you're taking the wrong trades and giving it back, right? That's typically what happens. So I'll give you guys this. It doesn't take a lot of money to make a lot of money. It doesn't take a lot of money to make a lot of money. That's what you guys get. Well, I've got Cheetah. I got crude oil up, man. I got a 50-50. I've got two divergences, and it is 10:30, which means crude oil inventories. So there's just none. There we go. How quick was that? I've got a bad bottom. I've got a 50-50. I've got two divergences, and I've got news. There's a lot going on there that says don't take a trade. Does that make sense, Cheetah? And this is the challenge. People are always like, man, Mark, go to the live market. 90% of it. 90%. Man, Cheetah, I'm not going to open up 1,000. What happens is my shit crashes because I'm running YouTube, I'm running Discord, I'm running 3 streaming feeds, I'm running NinjaTrader. And I've got a great computer, but I just can't run three markets and still keep up with you guys. Let me try and open gold, though. But gold's almost as temperamental as the NASDAQ, but we'll go take a look at it. And we'll scroll backwards, too. We'll scroll. Gosh, I've never even opened the gold with this one, so it's coming up on a different screen. So we'll do that. And Jonathan, some days both. Have you been a week off sim for you and you still have gone back on sim a few times? And you know what? Guys, sim's where you do it. If you think, man, I'm ready to go live and you're not making money, go back to sim. It's okay. That's not a failure. That's smart, right? If you think you're ready to be a driver and you keep driving into walls, maybe you're not ready to be a driver yet. Simulator's where to do it. Jonathan, one of the biggest problems is people go live because they get lucky a couple times. People go live because they feel like, oh man, I took 3 winners in a row, I'm going to go live. That's what I did. But the challenge with that is that if you haven't won every day for a week, maybe it's not time yet. Maybe you need to make sure that you can, right? Because trading isn't about a day. Trading is about a couple different days. So let me see this real quick. No, this is the one that I wanted to open. And then Cheetah, I've got gold coming up. Never fear. Hopefully I have gold coming up. Things you have to know, guys, before you ever go live. It's still calculating, but let me put these where you guys can at least see them. 3 things that you have to know, or 2 things that you have to know before you ever go live, is you have to know why you're going to enter a trade. What does that mean? That means that you have to have a plan. That means that you have to have rules written out. That means that you have to know what it looks like to have your rules met. Does that make sense, everybody? If you ever say, I think it might, it's not rules met, but Jerry, you had 10 days profitable before you went live. I love that. Build some habits, right? I think my record without a losing day is about 30 days. And that feels good when you do that. And that happens when you do the same thing. So guys, you got to know why you want to enter the market, right? What are my rules? And you have to know your rules. If you're anything like me, I'm not a rule follower, guys. Not even a little bit. So I have my rules written down in front of me. I have my rules written down on a piece of paper right in front of me. It's actually typed out big bold font. So every time I have to take a trade, I have to look at what my entry conditions are, and I have to either say yes, my rules are met, or I have to lie to myself. And when I lie to myself, I tend to lose. But guys, then you have to know why you'd exit. And this is the hard part, right? Why will you exit the trade? What are the exit conditions? If I'm in a high probability trend trade, what's it going to take to get me out? And you've got to commit to the rules being met. Your rules have to be based on patterns that win more than they lose. And you have to be consistent. And then guys, you have to know what kind of trade you're in, right? And Clara, you were a great example of that. Clara, you thought you had a clear path, and that's okay. That was just a chart read that turned into a great lesson. Show me a picture, Ollie. Show me a picture. Please don't make me chase historical, guys. Just show me the picture, and we'll talk about every bit of it, I promise. Guys, the exit conditions for a high probability trend trade are different than the exit conditions for a 50-50 trade. So you have to make sure that you know what kind of trade you're in. That's your chart read, right? The exit conditions for a 50-50 trade are going to be different than the exit conditions for a momentum trade. So you have to know what kind of trade you're in. The exit conditions for an HVA trade may be different than a momentum trade. Guys, you have to know what kind of trade you're in. And I stress that because, guys, I know I give off this air of just, oh my gosh, he must be a genius, and he's probably a great dancer too. But the reality is I don't have the attention span, guys. So if I'm a brand new user, all I want to think about, the only thing that I want to think about as a brand new user is a high probability trend trade and how the hell I'm going to get in and get out, right? I don't want to put the stress of a 50-50 trade. I don't want the stress of a momentum trade. I don't want the burden of an HVA trade and all the rules that go with it. I don't want multiple charts. I don't want anything but one simple thing that I'm going to get really good at. All right, Cheetah, live market. Smalls are inside of the large. Kind of overrunning. I don't have rules met. I don't have high probability trend trade rules met, Cheetah. Smalls aren't below the large, which means that I don't have odds favorable momentum. I do have a clear path. I don't have any areas inside of favorable large triggers. Do you see how I'm missing 2/3 of my advantages? Give me a Y if you see it. Not odds favorable. Not areas inside of favorable large triggers. But market went down. I don't care. I'm not giving up 2/3 of my advantages. So the high probability trend trade, that's a tough one. Ollie, did you decide not to show the picture? Did you said, you know what? Typing that picture is a lot of work. It's better if I just don't get an answer. 9:57 Eastern. On the small chart, the large triggers were below the 1-to-1. Don't care on the small chart. The large triggers were below the blue fibs. Can we call that a 50-50? Great question. Ollie, are you in a trade? Is that why we're not doing it? 50-50. Let's define a 50-50 again, guys. Let me go to... my large chart. No, you're okay. This is the fib that's problematic, right, Ollie? Cool. Large triggers are below. Small triggers are above. So it's not all about the large triggers. So what it is a 50-50 look. Come on, call out. I'll give you something to study. Ah, what did I do? So when we talk about a 50-50, get up. I'm having challenges here. Cheetah, weak triggers, no areas inside a favorable large. There's your crude oil live read. So when I talk about a 50-50, 50% of my triggers are through. My snagit is messing up. Let me kill my snagit. This is what happens when I start running multiple workspaces with 3 videos and all that going on. 50% of your triggers get through right here, 50% are not. So this is what defines that 50-50. And what this momentum says when 50% smash through and 50 are lagging is that this area has the potential to break. That's all it is. So when you come back to your small chart over here, you start looking for things. You start saying, well, did I have divergence on the small chart? Did I have strong triggers on the small chart? And I'm not worried about where these things are on the small chart, Ollie. My termination conditions are defined on the large chart, right? So here I had a 50-50 up top. The potential to break. There's 1 divergence and it pushes beyond, and 2 divergences. So 50-50 is a reference of the trigger location versus the small and the large on the large chart. Does that answer your question? Yeah, this was absolutely a 50-50. And then the conditions were really pretty over here to take a shot at that 50-50. Nice job. Good question. I appreciate those questions. And I wasn't trying to brush you off. It's just, it's always easier to ask those questions through pictures. So when I'm on a tangent someplace else, I love getting those pictures in there. Good stuff. All right, Zorro. Dun, 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 dun. Zorro says, I love drawing lines on small triggers. So you got in. Instead of, you waited for it to pull back and go up, you get in on the left side, and then that loss of momentum takes you out. Man, that happens, Zorro. But you definitely have an entry and an exit plan. I like it. In at 65, you're not willing to give anything back on the loss of momentum. Then it hits a termination. Over here, odds favorable. No room to the area at all here. But once you clear the area, it's easy money. And then Jonathan, do you see this one? This is kind of what we saw this morning. Same thing. Guys, if there's no room to make money in your trade, why are you risking money? But once you clear it, holy crap. Let's stay left of those triggers. And I love the exits, guys. You could use Zorro's charts as a how to exit a momentum trade lesson. Because they do it really well. And I'm going to say they because Zorro, all I see is the back of your hair. And I don't know if you are a young man or a young lady. So, beautiful exit. Give yourself room to work and you won't be so, guys, you won't be so stressed when you have that clear path. You won't be hoping that it doesn't happen, and you're doing just fine. You're on pace for 6 figures if you shut it down right now. Great stuff, guys. Because you wanted to do something, yeah. Eventually, you know, my brother says things and he doesn't sugarcoat very much. And one of my favorite things that my brother said to me was, Mark, eventually you'll get so sick of getting your ass kicked breaking your rules that you'll stop breaking your rules. And I'll tell you, it's a pretty true statement. My problem was trading in determination conditions. That was my biggest challenge, trading in determination conditions. And eventually, and I still do it, I'm not going to lie to you, I still trade into them sometimes hoping they break, and those are usually the trades that I lose. But we all have a thing. We all have a thing that we do. Mine was trading in determination conditions, and it was pretty detrimental to my trading. And the days that I absolutely refuse to trade in determination conditions are the days that I find the biggest level of success. So check this out. Cheetah, I'm sorry, we went to a different chart. Odds favorable, clear path, pull back to resistance inside of favorable large triggers. I'm so sorry we missed that. I was over on crude oil. That was the one, right? And then you had odds favorable momentum and a clear path. And Cheetah, do you notice how your correction points are on the wrong side of the triggers? And not just Cheetah, but everybody. When my areas get to the wrong side of my correction point, guys, it's bad news. It's a completely different animal. Good lesson. So, if you're a gold trader, that was your trade. So, okay, good question. So, Cheetah, let me just take a picture of my small chart real quick. Actually, you know what? No, let me take a picture of both charts and let's have some fun. Maybe. Is Snagit going to come up? Snagit's dying. I may have to go to Capture Software. So, when we talk about entries, Cheetah, do you remember how we were talking about the way we're so good at finding these entries? The reason we can be so precise is because on the large chart, we expect price to come back to the large triggers on these retracements. On the small chart, we expect price to come back to these large triggers, right? So I like to use that phrase. I expect price to correct to these triggers, which means that this is really, if it's going to continue down, this is where I anticipate the bounce. Does that make sense? I want to go through this and make sure that we kind of do it sequentially. Cool. So this is the correction point, right? On this previous trade, whoops, wrong one. Get off of there. On the previous, this was my correction point. So we're good there, right? Price typically corrects to the triggers. The correction is everything's going down, and this is that regression of the mean. I expect it to come in the triggers. So Cheetah, when I have a line, gosh, I did it again. When I have a line, fib, midband, yellow, 1-to-1, and it's inside of where I expect price to correct, it's the double whammy. Not only am I right where I expect price to go, but now I'm giving it something to bounce off of. So far, so good? So when I'm coming here and there's nothing for it to bounce off of, I don't expect triggers to stop the market. My anticipation is that it's a line inside of the triggers that gives me the highest chance of success. So once my lines are on the wrong side of the correction point, that's where that phrase comes from, the wrong side. I don't know if it's going to be the mid band. I don't know if it's going to be the fib. I don't know if it's going to be the 1-to-1s. I don't know if it's going to go up here because I'm already on the wrong side. Now I'm just hoping that a line floating in the middle of nowhere changes the direction of the market rather than putting the combination of the correction point and the area to bounce off of. Good stuff? I hope that made sense. It would have been easy to give some money back right there, wouldn't it? It would have been easy to give some money back there. But you guys followed rules and you embraced the language of rule number 3 that says areas inside of favorable large triggers. Steve, did you delete your picture or am I just missing it? There's Zorro's. Here's your how not to trade, and then it disappeared on me. Pretty sneaky. But guys, that's a good lesson. And that's why the rules are exactly what they are, right? Momentum is amazing, guys. And momentum is you can make a lot of money just on momentum. But when you couple momentum with a clear path, nothing to bounce off of, the momentum is more likely to carry the market in the direction. And then when you have momentum, a clear path, and something to bounce off of, in a pattern that repeats itself over and over and over, guys, that's the best of the best, right? And we've seen a lot of trades this morning that rely on momentum, but we've also seen people enter based on momentum but refuse to exit when the momentum is over. That creates a challenge, right? You have to know what you're getting into. We've watched people enter on momentum but no room to the trouble spot, no room to the targets. That creates a challenge. So what you're doing is you're starting to just talk to yourself and say to yourself, I don't have momentum because the trigger lines are different color. I don't have a clear path up because all my triggers are below this fib. I'm in an uptrend. Why the hell am I looking for shorts? And then you just have to say, and gosh, it's hard to say sometimes, I don't have a trade. And sometimes you'll have weak triggers and a clear path and no area inside of favorable large triggers, and it works anyway. And you're like, wait a minute, I've got to change my rules. I've got to start buying every midband because look, it made the market bounce. And your brain forgets, your brain absolutely forgets that we just watched it not work. Does that make sense? And guys, that's why adherence to rules, that's why focusing on the rules is so important, because it's not the one time that the market decided to go up. It's not the one time that the market decided to go down. It's the 100 times, and the look that wins more than it loses. All right. So strong trending market, Steve. And guys, I want to talk about this. When your market goes 30 bars in the same direction without a reversal bar, when your market smashes through 3 or more areas, and you get this look right here where the small triggers are riding piggyback on the large, and you see that dashed look, what this is a strong trending market. And when I have a strong trending market, I assume rule number 1 is met. And Steve knows that. And he has a clear path. Let's go see what happened on the small chart. And you're on the NASDAQ. All right. So 2 divergences from a fib. So Steve Diego, one of my rules is divergence from a fib, no more long trades until it breaks, period. That's one of mine. And then you're coming back and everything is red. And you decide to go long on the wrong side of momentum with down triggers. You formed an opinion about this fib. And it stops you out. Enter at mid-band inside a favorable. And guys, this is great. And Steve gets a smelly sticker because he's willing to post this. So check this out. Steve, on the NASDAQ, if you get divergence from a fib, That's it, brother. That's the end of the game. And you know it's funny because I remember when this set up and my brother and I were talking about it, and John took the long and exited right here at the fib. And when divergence printed, he chose not to take this trade. He goes, nope, not my trade anymore. That's a bad one. And then you come back here, and I understand why you did what you did, right? But if your large triggers on the small chart are going down, isn't that the correction point for more down? And if your synthetic triggers are going up, well, that's the correction point for more up. That sounds like an awful lot of indecision. And I understand why you did what you did. But this right here keeps me out of that. And sure enough, it goes sideways. And then large favorable line in the sand triggers correction point. I'm not 100% sure what that means. Ten-2 triggers down and wide. You went long though. Below the synthetics, red background, how to not trade, rule number 3 not met. Yeah. And guys, this is nothing for praise for you here, Steve. This is a lesson. If you're a NASDAQ trader and you get divergence from a fib, golly, I keep doing that. Let that fib break. And the 10-2 fibs, Steve, they're not showing up over here. Because it's not written in the software to pull your small chart fibs, if it's a 10-2, over to this one. So you have to assume that it's there. Divergence from a fib is a deal breaker. Mismatch triggers is a deal breaker, right? Wrong side of the small triggers, but they are going up. It's just one of those ones, and Steve has the courage to post it in the room and let it be a couple different lessons. But yeah, that's a little bit of a NASDAQ nuance too, Steve. Divergence, well, not even NASDAQ. That's in my exit plans. 100%. Let me show you. We'll turn it into a lesson. I love the picture though, because I remember it happening this morning, and I remember my brother typing to me, divergence from a fib, no more trades. Let me find it. I've got a little, and I'll put it in there too. I'll put it in the room as well. One second. Oh, looks like I need to draw one. Divergence from a fib. Sorry, I don't have it in there. I thought I did. Well, I know what I'm doing this afternoon. I'm building divergence from a fib. Exit condition. I want to see something here. Oh, well, I can't find it. Sorry. Would love to see that documented, D. I'll do it. I'll do it this afternoon. I'll create it this afternoon for you. Absolutely, Steve. Let me do this real quick. And I put this in the room already, guys. So D, it is documented. And this is not the gospel truth. You guys have to write your own plan. 3 divergences. Well, it's not even on there either. I'll do it today, D. But if I get divergence from a fib, it's game over. I have the picture somewhere. Now I'm just scrambling for it. So Steve, are you comfortable with what causes divergence? That loss of momentum, right? Cool. So if it takes a pivot to go up and go down 3 bars to create that loss of divergence, that didn't happen on the large chart because it's a different time frame. The same way these one-to-ones on the large chart don't show up on the small chart because it's a different time frame. It's different calculations making things happen. So your divergences are different. They're different swings. They're different losses of momentum. They're different patterns. Different time frames will have different looks. The same way it creates different fibs. Does that make sense? Awesome. So, Jeffrey, you're telling me with every indicator up, you're going to take a short directly into a fib? All right. It looks like it worked for you too. Cool. Everybody's going to do it different, guys. So you see 2 divergences in the same price range. It takes 3 to create the termination, so that's cool. Maybe a reversal. It's hard to have a trading plan based on maybe. I do like the termination condition recognition for sure. All right. It's up to you. I like longevity. I want to be in this game as long as I can. No, you're doing great. It's a big fight there. It's a lot of fighting. It doesn't have to be a fight ever. You can very much just go with the flow. Waited for the triggers to clear trouble. Momentum was dropping, but strong clear path. You said along at trouble 94? Oh, close set. So you traded 86. Why did you get in there, Kenan? You know what's funny, Jeffrey? Is you got out when you saw green, but you were willing to enter when everything was green. Weird, right? So Jeffrey, go back and find that same look. Come up with some rules. Awesome. So Kenan, your rules say that with weak triggers and a clear path, get in at the trigger lines if they're going up. And that's cool. Do you find it surprising at all that it retraced to areas? This is one of the reasons why rule number 3. So, no worries. So the rules are, I like the clear path, right? The market is trending. It's trending strong. It's been breaking through areas. It's got 30 bars. When you trade from an area, Kenan, when you say, you know what, let me get in at something bouncy instead of just a moving average, your risk is going to be a lot less. And I wouldn't know where to put a stop either because I don't have any areas inside of favorable large triggers, which means that I'm already on the wrong side of my correction point, and I'm really hoping that the area holds at this point. It could have gone all the way down to here. It could have gone to a mid band. It could have come all the way to these one-to-ones. So when you're taking a trade without momentum, when you're taking a trade without a clearly defined entry area, you just got to pick an arbitrary number and say, you know what, I'm willing to lose 50 bucks on this trade. Or I'm willing to lose 100 bucks on this trade. Does that make sense? And then the flip side is, and check this out. I don't have any rules for it. One of the things is when I get 30 bars in the same direction, I didn't have the trigger look though. I had weak triggers, not strong trend triggers. But if I have strong trending triggers where the smalls are riding piggyback, I see that dashed line, I'll buy the mid band until it stops working. And I'll usually put about 7 or 8 ticks on it. So yeah, I don't have any high probability trend trade plans because we're void of momentum, right? The only thing this trade has going for it is a clear path. 66% of your advantages are gone. So even on a trade like this, what I'll do sometimes is, and this is because I think and I speak in terms of advantages, and I always go back, and I know I sound like a broken record, right? I didn't have momentum. I didn't have areas inside of favorable large triggers. The only thing that I had was a clear path. So one of the things that I'll consider doing, Kenan, because the market is trending strong, right? You have that advantage. It's coming from that termination. Everything's going up. All the triggers are above. No, you're good. So let's do this. If price, and you're going to like this, I think, maybe. If price reaches an area and all the triggers are above, that area has the potential to stop the market, right, Kenan? If price reaches an area and all the triggers are below, so check it out. Let's go next level on this one. All of your triggers, every one of them are up and above the area, right? You identified the clear path. So if you go into your knowledge bank and you say, if price retraces to that fib at 79 with all my triggers up and above, it's likely to stop the market. Does that make sense? So what we're doing right now is we're kind of taking rule number 2, that idea, and we're saying, all right, well, 79 certainly has the potential to stop the market. Everything is up, everything is green. Let me see what it looks like on my small chart. Oh my gosh, there's that exact same fib, and it's right by a mid band. And if this is the point where the market is likely to stop, Kenan, doesn't it make sense that this is the point where you want to enter the market? Oh, the light bulb just... And this is why the very basic concepts, they really do show up later and pay dividends, guys. Because when you learn the language, you'll begin to impart the language on everything that you see, right? And I love this picture, man. I love everything about it. But the stop is difficult, right? You don't know, should it go there? Should it go here? Should it go here? Should it go 10 ticks below the fib? Hell, I don't know. So you really do have to pick an arbitrary number. And another thing that you can do is when you say, all right, this fib certainly has the potential to stop the market. Get off of there. And everything is saying up. But I'm just not sure because it's not in triggers. Some people, allegedly, will wait for a reversal bar. Because once they get that reversal bar, well, then their stop is 2 ticks below. They've got their established risk. Does that make sense? And this is where you've got to be able to run all this through your head quickly, guys. And if you're brand new, you're probably not going to do it just yet. You're not going to throw all these different things out in the 5 seconds that you need to do it. Which is why making sure that every time you reach a termination condition, right? Every time price reaches an area and the triggers don't break, you use that language. I don't have the advantage here. Weak triggers at 1-to-1s pushed it down, right? How many of you tried to go short right here, thinking that it was time to go the other direction? With that second correction point way up here, with those large triggers more than a full bar away. Did anybody try it? I probably would have tried it. Probably would have tried it. Jeffrey Dean, Right here, where price comes back to those large triggers that rolled, right here where it comes back and there's odds favorable, that's the patience entry, right? You're like, it could go, let the smalls roll. Once the smalls roll from that term, let me find a little pullback to them, and very often it looks like a pullback to the large triggers. So good stuff, guys. Great lessons. I love it when you guys post in the room. Pirate trade. Arr. What does that mean? That means Ron lets it roll a little bit. Smalls roll. Still aggressive as all get out. Termination, 2 divergences, 3rd divergence prints. Hit the button, out of trouble. Still gives me heartburn, Ron. But Jeffrey, you're not alone. You're in good company. Jen, we saw this one. Did you mean to post it again? I'll just hang on. Let's go to the live market while you grab that. Not even the potential to break yet there. I love it. Right back to the mid-band area. Large triggers a full bar away. No reason to try the short, right? Because now we're just kind of holding on and waiting. I love it. Gap theory. I'm going to my spreadsheet. I'm going to put another gap theory in there. Thank you, Jen. You're making my job easy. And then I got my notes over here. So for D, we're going to do divergence from a fib. Management. Guys, think about what you want to see. Think about what you want a 60-second video about. Think about what you want me to do a little Word document over. I'm going to take 5 minutes, and then when I come back, we'll finish strong. See you in a minute, guys. Oh, last hour. Oh, look at you guys sucking up. I love it. Great gap recognition though, right? And look at that termination. Look at the bounce. And then when they're on the wrong side, guys, right? Little confirmation goes a long way. You've been finding a lot of success in trading the market flow signal when it bounces off the mid band on the large chart. Still testing it. I love this. Ollie's creating a plan. I want to see what it looks like. I love learning from you guys. I really do. So large chart mid band, and it's also the gap theory, right? So Ollie, put that in your notes for when it works. So, oh man, I love this. Can I put some annotations on there too? I'm not trying to steal your thunder. So, right here, price reaches mid-band, large a full bar away. Gap theory says it may close back to large. Are you comfortable with the gap theory, Ollie? I'm assuming that you are. So when the gap theory is in play, you're saying if market flow gives me a signal. Cool. So yeah, because I think this is going to be one of the ones that's going to increase the likelihood of success for you. So the gap theory, and it's here in the spreadsheet too. I just want you to see that there's a lot of pictures that say gap theory, gap theory, gap theory, gap theory. So you can study those tonight, but let me go back to kind of my pictures, my go-tos here. So the gap theory essentially says that when price accelerates away from the large triggers, it loves to close the gap. It loves to go back to those large triggers, Ollie. Over and over we see it. Jen put a beautiful picture of it in here too that we'll go revisit. But when price accelerates away and the synthetic triggers are a full bar away, this is the reason for the season. No, this is the reason. Let me go to the Trader's Guide. Let me go slowly so that there's an awkward pause. That gap theory is the reason that the large chart mid-band behaves as a termination condition. So anytime price accelerates away from those large triggers and hits a mid-band, there's the potential that it will go snap back to it. And that's exactly what happened here. So that might be the first part. Price pulls back to the mid-band. If the gap theory is in play, let me look for that reversal bar. Does that make sense? And then the flip side, and let's just open up a large chart. There it is again, mid-band area, stuff like that. Large triggers a full bar away. Back to support, large triggers are a full bar away. So you start to see this theory. But here at the mid-band, Ollie, do you see how the large triggers are less than a full bar away? That they're actually coming at things pretty strong? This would be my giant red flag that says absolutely no shorts. Not looking for that continuation. Because the large triggers are simply too close. The large triggers are just too close for me to expect that gap theory, and it may blow through. The same thing happened right here. But if we go back and we take a look here and there, and this, I love this, patterns repeat, right? Look at that mid-band, Ollie, and look at the large triggers a full bar away. Egads and little fishes. What a great time to look for that signal. Does that make sense? So if I were creating a plan, the way you're creating a plan right now, what I would do, and this is just me, And I'll drop this in here. So, guys, this is how you make plans for trades outside of what I give you plans for. And Ollie, you're doing it. You're doing it great. So first I have to define my entry, right? And I dropped this sheet in here. This is a template to help you create a plan. What do I have to say? I have to say mid-band reached, large chart, and large triggers, full bar away. That would be my first condition. Because what that does is it tells me that the gap theory, that the gap theory is coming on now. Does that make sense? So what I'm doing is I'm creating a checklist for entry, and I'm misspelling everything horribly. And then I have to say, and what I might even do, and this is just me, so strong tops and bottoms. Strong tops and bottoms decrease the likelihood that that mid-band is going to hold. I'm making a mess of things here. So I'm just going to exit out of this and not save it. But I dropped this template in there, which you're going to have to do. I'm going to not save it. And I'm going to go back to your picture. Maybe. Because of this termination condition, this mid-band has a better potential of breaking, right? So you're going to have to watch that. You're going to have to watch those triggers. You're going to have to wait for your signal. And I'm wondering if maybe even... Where is your picture? I think I got rid of your picture. I apologize. This is fun for me. This is so much fun for me. This is what I do every morning. Is when it comes back, notice that when you traded into, it didn't work out. But when you had that snapback, beautiful. It's also a pivot stop out. Your large triggers up here are so far away. Your small triggers are so far away. Correction points, right? There's like the vacuum sucking everything up. I love it. I think it's a great looking trade, and it's a mid-band. And if you've ever watched Siva in the other room, he puts a lot of faith in those mid-bands, and it's supported through a higher time frame. So I think that you're onto something. I really do. And I'm setting up a trade of 8 with my brother. He's doing the smart stuff. I'm doing the learn how to trade it. But this look right here, Ollie, is the basis, really, of my plan outside a NinjaTrader without all the advantages that Nexgen has. And it's not loading up for me right now. But I've essentially, come on. I've essentially got the same look of the range charts and a couple different things. And its mid-bands close on the correct side. Coming through, and that was crude oil, and that was the mid-band long, the same one that you just took, all the way up to divergence high, where the market paused and had problems. Kind of cool, right? It's the same concept, is what that is. I love it. That's how you get next level, guys. Start recognizing patterns. But who wants to go chase patterns all day long? When you already have a plan, make your money, and then recognize patterns along the way. It'll help out. Let's see what gold's doing. Holy consolidation, ladies and gentlemen. Cheetah, I knew you wanted to look at it, man. Look what it did. 3 divergences in the same price range. Mid-band, Ollie, full bar away. Mid-band again, no momentum. Mid-band again, big problem. Not above fibs. Holy crap. There's consolidation, guys. Rule number 1 not met. Rule number 2 not met. How cool is that? Guys, the rules are designed to keep you safe. The rules are designed to give you an advantage every time you enter the trade. Who's next? What are we looking at? What do we want to talk about? I got a term, right? It's got to break. Or at least have the potential. And guys, what I try to avoid is ever saying that you took the wrong trade. So when I look at your charts and I go, holy crap, you gave away every advantage that I teach, it's not me telling you don't do it. It's me hoping that you understand that there's a lot against your trade. And guys, longevity comes through consistency. The most consistent people do the same thing every day, the exact same thing every day. All right, Jeffrey, let's see what you got. When mid-bands are a full bar away from the large triggers, it could be a sign of reversal. No, not at all. Not even close. I did. No, it's okay though. You're all right. This happens a lot. So check it out, Jeffrey. Sorry, it's the dam that I'm giggling at, not you. I promise. But this is a very misunderstood, right? So it's not when the mid bands are a full bar away. If price reaches a mid band and the large triggers are a full bar away, the mid band is a term, gap theory in place. So that's your gap theory right there, Jeffrey. Right here, it's just a termination condition with odds favorable momentum to the upside. And just out of curiosity, why are you so hell-bent on counter trend trading? You've got this giant chart that says up with momentum, that says, holy shit, it's been going up all day long, and you are adamant about going the other way. It's cool. Why not go with the flow? Right? So, can I give you the easiest brain adjust? Until you get comfortable with some rules, let me show you. And there's people that have great success counter trend trading. But if this background is green, then the smalls are above the large, which means momentum up. Does that make sense? If this background is green, the smalls are above the large, which means that you have momentum up. And Steve, Steve throws an interesting talk in there, right? So if I have momentum up, if the trend is up, man, my path of least resistance, Gary, I hope you're all right. My path of least resistance, Jeffrey, is to go up with it. And it's almost too easy. And then if everything says down, my path of least resistance is down until I hit something solid. But just because I can't go up because of a termination condition, it doesn't mean that I'm automatically going short. And there's a big thing. And Steve says, why not just go short from high and get stopped out if you fight everything, right? Or maybe you just say to yourself, why fight everything? I don't have to. I'm better than that. Let me remind myself of the book that John Novak wrote, How to Commit Financial Suicide. Chapter 1, they're trading against strong triggers. Chapter 2, they trade in determination conditions. These are the two biggest profit killers for traders. You've got so many tools in your arsenal, but as long as you're, So Jeffrey, though, you sat on your hands for most of the day, but maybe you're missing these long trades where you could have made easy money, right? So, and I've done this. Oh my gosh, I've done this. And let me show you what happened. Do you remember when the S&P tanked? I mean, it just absolutely tanked. It was like 90s. So there was a client, and I want you to see something. There was a client that said, well, when it reaches resistance, I'm going short, right? And he did it with $1 million. And he goes, well, it can't go up forever. Here's another million. Here's another million. Here's another million. Let me add on to that million because it appears to be doing what I want it to do. There's another million. There's another and another and another. And the whole time, this guy fought going long against a market that was tanking. When it was done, he lost $12 million. And somebody else made $12 million going with the flow. And I'm telling you guys, the path of least resistance is go with the large chart. Go with the people that control it. Go with the people that are pushing it. Go with the momentum that's established. Go with the clear path. Because there's money to be made, and it's easy money if you allow it to be. And if you're just gonna fight everything anyway, hell, fight right at a line at least. Give yourself a chance with the bounce. I don't advocate for it, but Steve's absolutely right. If you're gonna fight everything, at least fight at a line. Man, amen. Just like water. Just like water. And you know, somebody said that it takes two to make a thing go right. Momentum and a clear path. And it takes two to make it out of sight. Momentum and a clear path. Once you have those, guys, I'm telling you, life really does get pretty low stress as a trader. How many shorts could you have taken that lost compared to how many longs you could have taken that won? I love these lessons, though. And man, there are counter trend traders that are freaking amazing, Jeffrey. Yeah, I know, right? So what do we have right now? Cheetah. I've got a termination. I've got odds favorable. I've got the potential to break if I get a reversal bar. Here's the top of my triggers. Here's the bottom of my triggers. I appear to have one line. Oh, and I just killed my freaking chart. I have one line inside of favorable large triggers. Son of a bitch. Cheetah, I tried to do it for you, brother. And there goes Ninja Trader. This is why I don't run multiples. That's okay, though. Let's see if we can get it back up. But what we had was a termination that reversed to market, right? Did you see it before it died? Is anyone else watching gold? Did you see that there was odds favorable momentum? Did you see that it wasn't a clear path? It was only a 50-50? What does that mean? That means that if I get divergence on the small chart, my rules aren't met. But if I don't get divergence on the small chart, well, then I've followed the KISS plan for a medium probability 50-50 trade. Does that make sense? Oh my gosh. Roll it over. Let's get this chart up and we'll see what happened. But that's it, man. So it's just a matter of Does it fit the rules? And we'll find out. I'm trying to load back up right now. But I forgot to save it, so it just rolled and it's grabbing new stuff, and we'll see what happens there. Does anybody have a gold chart on hand right now? Post it in the room. Rob, I show my age all the time. I was trying to explain Talladega Nights to somebody, and I realized that movie's older than I thought. Love that movie. Have you seen that movie, Rob? I've got a funny picture that I made. I'll send it to you. It's not appropriate for the room. So guys, we're waiting for gold to come up. We'll see what happens there, but we'll see. I don't know if it was going to be a trade or not going to be a trade. What I do know is that if no divergence printed, then it would have fit my rules, so we're going to have to see what happens there. Solid movie, right? Love it. Did it roll? Are we on the 8 contract on gold, guys? Any gold traders here? It feels like it, Rob. It feels like it. When people go, oh yeah, back in the 1900s, I'll let my kids say that. Well, you're from the 1900s, Dad. Shut up, kid. Is it done? I think I have to roll. What's the next contract in gold? Are we in August? Are we in September in gold? Because that one's not moving. It is August? Oh, you know why? Because I'm not connected. Jen, I had a black and white TV. You want to know the truth? And this is funny. My wife still makes fun of me. I thought that the world was in black and white until they invented color. So when I saw that black and white TV, I literally thought that there just wasn't any color in the world. Yeah, and I went on to be an artist. Isn't that crazy? Kenan, this is a 5-1, right? Me too, Rob. Blue is support, but I don't know how it fits into the world though without a large chart to look at. What I do see is there was a fib here, which means that you have a termination condition or a 50-50 potentially. Your small's got above it, your large got above it, so resistance turned into support, but I don't know how it fits into the grand scheme of things. I don't know what that means because I don't know. My large chart defines my areas. My lines on a small chart are only for entries, right? So I don't know if there's anything to do there or not. Sure looks like a termination condition holding to me, which means that this really has nothing in my life. All right, so now we have a clear path. Does everyone see it? Cheetah? You do have a clear path. And my correction point's on the wrong side of those triggers. Oh, it doesn't. There's no way it looks the same. It can't. I guarantee it doesn't look the same. Let's open it up and let's find the differences. So guys, in that gold trade, what we're looking at is our lines are on the wrong side of the correction point. So what we have to do is we have to say to ourselves, I'm either willing to just hopefully jump in and see what happens, or I'll wait for a level of confirmation. All right, Ollie, let's see what you have. Odds favorable. You wait for the confirmation bar off of the midband. You take the antenna. You had room to 42, so it was a 50-50. You wait for confirmation, you're out at trouble, and then you get paid. And I love that you said probably should have let it run to the fibs. You sound like my brother. You just made $300 or $200, right? Enjoy it. Spend it on something nice. 50-50. One divergence is problematic. Two divergences that's a heartbreaker. So I don't disagree with not getting back in with two divergences on a 50-50. All right, I'm still calculating, Kenan. So once I get the fibs up here, they may be the same as yours. They may not. As much damage as I do to my... do you want to show me your chart? Show me the large and small? Let's see if we can find some differences in there. Awesome. I'm not going to lie, guys. It all looked the same to me in the beginning. So let's see if we can find some different things. To the tick, right? It's similar. So what are the important things? Price reach resistance. None of the triggers broke. And Kenan, this is kind of what Miss Clara did earlier. Do you see how this is a termination condition 100% at 51 without question? This fib is, who cares? You're losing momentum. You're at a termination. And it's hard to filter those out initially. It really is. It's hard to filter those out initially. But what I'm looking at is no long trades, right? Not yet. And that fib is just another spot to dance. Great picture. And that's tough. If you waited for confirmation bars, you got 3 of them, right? But it's still a termination. And this is where divergence from a fib again. D, there it is again. Divergence from a fib, trying to ruin your good time. You'll see that a lot. And that's perfect, Kenan. And it goes back to the very basic, right? To that super basic. That's not the super basic. Gosh, and I go back to simplicity all the time. And I know that I sound like a broken record, guys. But your smalls were coming back inside of the triggers, right? Does everybody recognize that when the smalls return to the large, that momentum is going away? And you reached an area and none of the triggers broke and you didn't have a clear path. And guys, if these two aren't happening, you don't even have to look at your small chart. In fact, it's almost a good idea not to look at your small chart, to do this. Until my rules are met here, and they're definitely met here, why bother trying to talk myself into an entry? So Cheetah, you got everything but areas inside. Does that make sense? All the triggers are above support. Support has the potential to hold, especially with this momentum. But on the wrong side of the correction, and this is how I think every day, will it be 85.6? Will it be 85 flat? Will it be 84? Will it be the mid-band here at 84? Is it okay to say you don't know? I think so. So Cheetah, sometimes what I'll say is I'll let it hit the area. And it has to hit the area, right? And if I'm pretty hell-bent on taking this trade because of that momentum, exactly, I will right-click and I'll put a buy stop limit. Whoops. Right there, and say I'm insisting on a reversal bar. But I wanted to test that area. That's a pretty key area. So that's kind of what you're going to do when your rules aren't met. You know, you're like, oh my gosh, everything about the large chart says up. I have to figure out how to get in on the small chart, right? Well, let me let it get to the areas that are likely to hold. And then let me look for something. Both your markets are in wheelchairs right now. Right on, Ron. Enjoy your afternoon. I'll see you tomorrow morning. I appreciate you being here. Even the trades that give me heartburn. So we're just in that holding pattern. And we'll see what happens, and we'll come back and recheck it, right? And then there's termination conditions starting to work. So guys, do you see how everything is still greening up? I'm going to go back, and this is kind of going to be a little bit on what what Mr. Trimper was saying earlier. There's a big difference. There's a big difference between might hold and has held. And this was a good lesson, and I put this together for a guy that loved to go counter trend. So if you're that guy, which is cool, right here, and this is a range chart, but right here, I'm saying I think it's going to hold, right? So Steve's like, dude, if you're going to go counter trend, at least do it at a line. Well, this is the might hold. And then you get stopped out, and then everything is still greening up, and it still might hold, and you get stopped out again. And then once those triggers roll, once the smalls get below, once you have confirmation that the area is held, it's the same freaking price. So that little bit of patience, guys, pays huge dividends. It's okay to say, I think the market might reverse from here. Have a good one, Cheetah. It's okay to say, I think the market may reverse, but let some things roll. Let it prove to you that the area is going to actually reverse, rather than just hoping it does. 34.5 for the large, Rob. 13.2 or 10.2 for the small. Why are you becoming a NASDAQ trader all of a sudden? You bored? Do what you want. All right. You do what you want. Paul, you're waiting for the fill here? Paul, are you saying that you're demanding that it goes to the area likely to hold rather than just jumping in, hoping? Nice to see you in here, man. Hope you're doing all right. Been a while. I like it. Yeah, Rob. John's been swinging clubs for 27 years. You've been doing it for 27 weeks. Just because I watch Tiger Woods play golf doesn't mean I'm going to play golf like Tiger Woods. I mean, I would, of course, because I'm awesome, but, you know, the average mortal won't pull that off. Hehehe, so not true. Everything here still says up, right? Except for that termination. I'm not going short yet, guys. I don't fight large triggers. That's financial suicide. There you go, Paul. Me personally, on the wrong side of the large triggers, these guys are going to have to give me a reversal bar. That's the only way I would ever consider taking this trade. Is if the buyers take back over. It should be 8. Rob? Paul's more aggressive than I am. I've got too much faith in those trigger line correction point. So Paul is going to get in at 85.6, 85.7, $70 better than me. That's the cost of my confirmation, is $70. Which one of us is right? Both of us, because we're following our trading plan. Both of us are right. That's the cool thing. What's right for me may not be right for Paul. What's right for Paul may not be right for me. Otherwise, I'd have to ask him to quit chasing my wife around. So we'll see what happens here. I don't know. Everything I do revolves around advantages. Kenan, have a good one, man. Thanks for being here. Thank you for posting. Thanks for giving me the opportunity to be helpful, or hopefully I was helpful. And guys, we're coming up on the tail end here. We'll hang out and we'll see if we get that reversal bar. But I'm also going to go ahead and shut down YouTube and